channel members have been asking me about Visa stock, my thoughts, my ratings, and my price prediction or fair value calculation. And so I'll reveal those in this video here. I'll answer what I believe Visa stock is rated, whether it's buy, hold, or sell, and I'll reveal my fair value calculation for this business. It's increased its revenue from $13.9 billion in 2015 all the way up to $39 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 11.5%. That's a strong growth rate for a company like Visa, which you might expect to be a much slower growing company. Furthermore, Visa benefits from the increase in inflation because the company generates revenue based on a percentage of the transaction value. I also wanted to evaluate its return on invested capital, and this too looks really strong, increasing from 16.8% to 26.2% in the most recent period. Now, as you might already know, I like to compare the ROIC with the WACC. Comparing that with the ROIC of 26, the company has an almost 3-to-1 ratio ROIC to WACC, which is incredibly strong. That means the company is generating shareholder wealth. Anytime you have a company with a return on invested capital that's greater than the weighted average cost of capital, that company is increasing shareholder wealth, because whatever it costs the company for the capital it's using to deliver products and services, it's exceeding that with the returns on that invested capital. That's a general rule of thumb I apply to all investments I consider. Now, I also like to look at valuation on a forward price to earnings basis, and Visa's trading at a forward PE of 27.4, which looks relatively undervalued given the company's growth rate, expanding returns on invested capital, the competitive position in the industry. I like the competitive dynamics in this industry. You don't see Visa and MasterCard and others fiercely competing against each other with promotions, incentives, and decreasing fees with merchants. You rarely ever see that, and that's attractive for investors. You like to invest, or I like to invest for sure, in industries with level competition and competition decreasing. I despise investing in industries that are undergoing fierce competition. It's one of the many reasons I've avoided all electric vehicle companies in the previous 4 or 5 years, and that served me incredibly well, as many of those EV stocks are down over 90-95%, with many of them going bankrupt also. Click the link below to watch the full video.